Hello and welcome to Inderes TV. Today I'm here with Analyst Antti Viljakainen to discuss Valmet. Hello Antti and welcome.
Hi Pia, thank you.
So Antti, what does Valmet do?
That's always difficult to put in a nutshell, as we are talking about a large cap company with almost 20,000 employees. But if we go through this question from the reporting perspective, Valmet has three businesses. The first is process technologies, which is basically equipment business to pulp and paper industries. So Valmet offers equipment to pulp mills, board mills, tissue mills, and also if someone would like to get equipment for paper mill, they can do that as well. There are single equipment and full production license entire mills in their offering. The second business is services, which is basically a different kind of spare parts, wearing parts, service work to pulp and paper mills. So it's like more driven by the customer operating expenditure, while the process technologies is driven by their investment. And the third business is automation, which basically includes automation systems and also different kind of flow control stuff like valves to various industries. Pulp and paper industries also a major customer for automation business, but there are also other industries like process industries like chemical industry, to which Valmet offers automation systems and valves.
So a lot of different businesses, but seems that pulp and paper is one of the big.
Yes, definitely. That's the traditional route of Valmet, which has been built over the decades, and only in the last years the company has expanded a bit more to other segments through automation business area, which was actually created by the relatively large M&A deals.
Okay. So then moving on, the guidance for this year was surprisingly positive, and you remain more cautious in your own outlook. What do you expect from the company this year?
Yes, Valmet guided their net sales to be flat and EBITDA to be flat or to increase from last year's level, which was Valmet's record. Valmet's order backlog is down some 10% year on year, which indicates that it might be a bit difficult to grow this year. And actually I was expecting even a guidance that would indicate sales to decline this year. But eventually it seems like Valmet sees a quite good demand in how to say this, in these businesses in which orders flow quite fast to net sales like services. Even if operating rates that are major leading indicator for service demand are still relatively low in pulp and paper industry, but they should be improving. And on the other hand, Valmet's order backlog is a bit shorter in time this year than it was last year, which makes possible that the net sales may not decline even if the backlog is down some 10%. And as the outlook for net sales is decent, and it should be so that the share of these highly profitable stable businesses like service business and automation will increase, it means that Valmet may be able to grow its EBITDA, even if and it says would grow this year, and some inflationary pressures still exist on the market, for example, in labor costs.
Okay, so there have been a few acquisitions that Valmet announced, but not all of them have yet been completed, and at least one is expected to be completed later this year. Is there a possibility of any new acquisitions being announced in the near future, apart from these?
Well, it's always difficult to consider exact timing, but if we look at Valmet's history, so listed company in Helsinki Stock Exchange, they have been able to find acquisition targets constantly and acquired new sales of several hundred million euros during the last decade. So I'm quite sure that at least on the medium term, they will do again deals, potentially in these two segments of stable businesses like services and automation. In these businesses, Valmet's market share is lower, and they can find more easily a different kind of acquisition targets from different parts of the world. So I'm quite sure that they will do something. These two latest deals have increased a bit Valmet's debt level, but it's still very well in control, and the company can digest its debt relatively fast. I guess, and thus I think that if there will be no acquisitions short term, there will be on the medium.
So it's definitely a part of their business model.
Yes, exactly.
So what's the valuation looking like at the moment?
I see valuation from every perspective quite undemanding at this point. Valmet's PE multiple is currently on 12-month trailing basis, so we're around 11, 12, and about the same figures apply for this year estimates. Corresponding EV multiples adjusted are single digit, so these figures are well below Valmet's 5-year own median levels, and also well below peer group median multiples. Given Valmet's competitive advantages and market position, I see reasonable that Valmet should trade at somewhere EV 12 or and at B 15, for instance. So there should be a relatively good upside in the share of if we look at the multiple-based valuation. DCF model also suggests that the stock is currently undervalued with very reasonable assumptions over long term. So investors have very pessimistic view that Valmet's profit will remain on the same level they reached last year, and there are definitely no expectations priced in the stock that profits would actually improve this year or medium term.
Okay, and so there might be some potential for upside there.
Yes, I think so.
Yeah, and then finally, Valmet recently issued a green finance framework and seems to be focusing on sustainability and green issues. How do you see this affecting the company?
Well, at least the cost of this green financing was relatively cheap, in my opinion. the coupon rate was set to some 4% for 5-year bond, which doesn't look too bad given that short Euribors are trading on the same level at these points. And if we compare this coupon rate to coupon rates of other companies that have been issuing bonds recently, it looks really good price for debt financing at this moment. So maybe it finally will start to be visible in the debt market that green bonds are actually cheaper than let's say ordinary bonds. But this is just one example that we see with with Valmet, and let's see if this becomes more like broad conclusion.
Okay, thank you, Antti. And if you want to know more about the company, you can go to inderes.se and read our latest research there.